The daily intraday review is proudly brought to you by our visual trade journal. It's software for price action traders. It's a visual trade journal, meaning you can drag and drop right on your chart, rate your outcomes, rate your predictions, all on the chart. It's different than anything that's out there. Come and check us out at intradayreview.com. Hello, this is yesterday's price action for the Euro USD 3-minute chart. We had an overshoot followed by a spike and a strong bull channel. Let's jump up to the 15-minute chart to see how it is formed. So up on the 15-minute chart, you can see that a channel formed, or a wedge, and we had the overshoot. This is also a double top from last Friday's high. You have to keep track of the highs and lows. So this is yesterday's Friday's high, and we rejected off of there as well. So there's two forms of resistance there. We are expecting the two legs back, and those two legs were massive. So we had the massive bear bar there, and then another even bigger bear bar, and they are clear overshoots. We can see that they cut through that line. So going short there is very dangerous. You're better to hold off and see what forms here. We didn't get sideways action. We got that little channel down with the overshoot again, which usually leads to some sort of pullback on the bigger time frame, and usually that's a complete reversal on our time frame that we trade. So you're literally looking to go long in this session for most of the session. And then after that pullback, of course, we've got that second two legs back. We then head back down on the 15-minute, but that is after the London session. So we'll jump up to the 3-minute chart. I was unable to trade last night, but I've still had a look today, and we'll just go through the trades. So again, we have the channel formed, we have the overshoot, we've smashed through yesterday's, Friday's high, and that's a double top, and it's failed. And to get in there would be quite tricky. This bar is you can visibly see the gap there, so it's hard to get your order on. You'd have to jump in after the fact on this engulfing bar really to get in. So I'll just move this up a bit bigger. If you get in there, you are expecting those two legs, so you may wish to hold, or you may scalp out some and pull your stop to break even and then hold for the rest of the move. Also, last Friday, we also drew our measured leg down, so our two legs down, and you'll see that we actually reached just a little bit less than the two legs down. So it's always good to draw your measured legs to give yourself a target. So you may be thinking that could be the target. Let's take a look here. We then really overshoot again this smaller channel, so we've overshot massively again. We are expecting some sort of trading range by this stage. People are going to start taking profit. So that happens down here. We keep overshooting. You have some profit taking going on, but there's always that final little push there. So on that triple test there, maybe you take a scalp. You've only got room for one bar. You want to be exiting at the lows here of this channel, so you'd sort of be trying to buy in high on that third touch. If you see the rejection, and taking down just a small scalp. We then overshoot again, so we've got this smaller pink channel, of course, working down. We overshoot again. We've got a strong bullish bar. Maybe you could take that for a scalp back up to the range. Normally, the first failure down low will go back up to that range. It's like a magnet, as Al Brooks would say. And then it will go back up. Then there's another really strong leg that pushes above the EMA. By this stage, I'm thinking we've got to pull back to the EMA on the bigger time frame. I'm looking for that. So going long there is probably something that I would do. There's gaps forming. I'll just move this gap. It's not drawn in that well. So we can see gaps. So we're expecting to go higher. Taking that just for a scalp, just looking for two legs up. So one leg pull back, two legs. So taking it out there, it then stops. We then get start to create a pullback here. So we get our first entry long, second entry long. There is a failure there, so you can take scalp. It's an opposite direction. Remember, we've had a spike. We're expecting some sort of pullback now on the bigger time frame, or a channel on this lower time frame. So taking a scalp is that's still a much more dangerous trade to take. You're better off waiting for this bullish bar to form, and then you'd start to think, oh, this might be the low of the channel. And then looking for multiple bull bars in a row and jumping on to the top of this channel which then fails again, and that's at the 50% pullback mark. So there's our fib. And for the fib, we just do it Al Brooks and Mack style, where we only look really for that 50% measured leg pullbacks. We don't look for all those other numbers. Usually the 50% is enough. So we get the failure there, and this comes back, very strong leg down. We're expecting another leg down. Maybe you take that, that's right at the end of the night. You want to get out in the first 30 minutes before, you know, any big bars form, if you do take that trade, or move your stop to break even. Last night, not that many trades. If you're lucky enough to get in here, you had a really good night. You didn't have to do much. You just held on for that leg, looking for that, you know, from Friday's measured leg. You're looking for a touch about that low, and you would have had a good night already. If not, if you waited for this channel to form, there was a couple of good trades in here, and yeah, it was again not that many trades on the night, but that's how we see it. Thank you.